Hi traders, welcome back to another trade recap. So as promised, I told all of you that I'll be doing more trade recaps video, especially on my break-even trade and losing trade. So I just took a sell on EURJPY. It was based on the sell limit, close out the position for break-even, or actually small profit, about $2,000 plus profit. But I just call it a break-even because again, for my account size, $2,000 are really small and I really consider them just as break-even. So let's have a look at the chart. That's the position that I took. I was initially aiming for about a 1 to 3 on this one, back to the previous swing low, but it doesn't really look that good. That's why, according to my rules, according to my principles, I just have to close it out for a break-even. So I'm not sure what will happen next, but the rules is rules. I can't change it. So if you look at the 4-hour time frame, you can actually see that how we are in a strong sell-off. So that's how I define a seller's territory. Then we have the first swing high being confirmed, push down. So when price really, even if it pulls back deep, I am still bearish on this one, and especially when price is around this significant resistance level. So I start dropping down to the lower time frame on the 1-hour chart. So on the 1-hour chart, we had a massive fake out here. We have a strong push, then we actually fade under the resistance at 143 level, and I dropped down to the 30-minute chart. Can you actually see how we actually failed, or sort of form a head and shoulder pattern here? You can actually say it's a head and shoulder around that 143 level, and 143, this kind of whole figure level also act as a very significant memory zone as well. Everyone, when they look at 143, they're going to say, hey, that's significant, that's very important, let's take a little bit of action there. So start dropping down to the 15-minute time frame. If you look at if I put on the replay mode, you can actually see I took my entry based on the 2-minute chart. Pretty obvious here. You can see the solid pin bar. I took my entry after I saw price actually hold it after forming the pin bar. Then that's when I get into the position, back to the 15 minutes. Usually I get onto the 1 to 5 minute chart for entry position. Right after I enter the trade, I'll switch back to the 15-minute time frame for management. Because when I'm entering a trade versus I'm managing a trade, those are two completely different topics. The way I manage the trade, I don't like to look at the 1 to 5 minute chart, because if you're looking at the 1 to 5 minute time frame to manage your position, you'll find yourself closing out a good trade way too early. So that is something that I want to avoid as well. That's why every time when I enter a trade on a 1 to 5 minute chart, I quickly switch to the 15-minute or 30-minute chart to actually manage them. So on this one, price initially went into my favor, and you can actually see there's a bottom band or a bottom trend line. Seems like a bad flag to me, and I really love the way that price initially just broke under the channel. But guess what? Price just decided not to follow my plan. So before I entered the trade, I had multiple scenarios in my head. So one of the scenario was that if price break through the level but still form some sort of inner structure support like this one, minor support, trying to hold this kind of unknown level, then on the second retest, if it still can't break through, which is this one, that's the first retest, second push down. If it still can't push through this minor zone at 142.68, I'm going to either move my stops to break even, or I'm going to manually close out the position. So in this case, you can actually see price spike up, then I actually close my position around 918, so somewhere here, for about 0.43 R. So I just call it, again, I call it a break even. And I'm happy that I did that, because if not, I would have lost about $6,000 on this particular setup. So if you look at how price moved later on, I definitely would have been gotten stopped out on this one, because Euro-Yen is known for spreads. On any broker, Euro-Yen usually has about 1.5 to 2 pip spread, the least 1.2 pip spread or 1 pip spread. So I'm happy that I closed out the trade, actually avoided a loss. Every loss that you avoid, that you prevent, a profit, because in the long term, if you accumulate them, those are a big chunk of money. So that's pretty much it for the technical perspective. So just again, just a little bit of proof here. That's my first account. You can see I had a sell limit on Euro Yen, got triggered at 143.05, got out at 142.914, closed for about $1.3 thousand. So that's on the first account. Second account, you can actually see, just ignore the 0.01, that was the previous trade recap. So in the midnight today, after the FOMC, I actually made about $35,000 trading the Aussie dollar. So go back to the previous trade recap. It's actually happening just about 10 hours, maybe 10 hours before this trade recap video. So on the second account, you can actually see I made about $1,031 on this one. So scraped off the position for about 2,000 bucks, but it's, for me, it's really considered break even. So that's it for the trade recap on this one. If you like the video, please don't forget to like, share, and subscribe, and I'll talk to you next time. Bye bye.